The shares of Intel getting a boost today after the world's largest chip maker announced that it's going to add $10 billion to its stock buyback program. Is it a sign that the technology sector is roaring back to life and bringing the rest of the economy with it? Well, let's ask Lorenzo. He's the chairman and chief executive of Kaufman Brothers, an investment bank that focuses on technology, media, telecoms, and green technology industries. Benny, good to have you with us on Taking Stock.
Good to see you again, Pim.
Now, let's just put everything into context. This buyback that Intel is adding $10 billion to, we knew they were buying back shares. We just didn't know how many shares and how much they were willing to spend. Does this give you even more confidence about investing in certain types of chip stocks?
Oh, absolutely. I mean, it's just a test to the level of cash that there is in not only in the U.S. companies in general, but the tech companies and Intel in particular. They have a lot of cash on their balance sheet. They're growing well. They just beat the earnings and revenue projections, and you know, they are now giving a higher dividend, about 3.4% yield. So it looks pretty good.
Now, you were just saying you were back recently from China. You spent, what, about 10 days in China?
We spent about 10 days in Beijing, Shanghai, brought about a dozen investors with us and saw about 25, 30 technology companies and a bunch of Chinese companies.
Technology companies, though. So do you see this even more capital flowing to technology companies, not only in the United States, but overseas?
Absolutely. We are bottoms-up fundamental analysts, and we talk to about 300 or 400 companies a month. And they continue to say that the U.S. economy and the Asian economies are getting better. So from a technology investor's point of view.
And is this coming from enterprise spending, from corporations, or from the retail customer?
It's actually coming from enterprise. You know, we're starting to see, and we're seeing a increasing growth in the enterprise rather than the consumer, than the lower end area. So enterprise, small and medium-sized businesses are really generating more IT spending.
So does this mean that people ought to be looking for companies that are prospecting in the cloud, so to speak? I mean, that cloud is the idea that you have a sort of low memory, low power device that you maybe carry with you everywhere, but indeed that information or those applications reside someplace on a server.
Well, the cloud computing and virtualization, which is VMware, I mean, they just released earnings today that very good. All of that is really growing fast, and you have the clients such as the Apple's iPad, which can access the internet very, very easily. All of that is working to generate more demand and more revenues.
All right, you brought up the iPad, so I get to ask you, what do you think the iPad is going to do to Apple's future?
It's huge. I mean, when we went to China, we met with China Unicom. And China Unicom is another stock we like, but they said that they couldn't get enough iPhones and they didn't even have any iPads, nothing. They had not been authorized in China yet. So that's still to come. And the iPad, they sold about 7.3 million units in the December quarter, beating expectations, but that's just a start. I mean, that is really going to be a significant contributor to their profits and to their revenues.
What about the applications that are being made for devices like the iPhone and the iPad? Is there a way for investors to make money there, too?
Well, that's the secret sauce of Apple's success. They have 360,000 applications in general, 60,000 of them dedicated to the iPad alone. And that makes it very, very successful. And for investors, there are a number of companies that generate applications and focus in there.
Do you see that the iPad will eventually be adopted by businesses as a mobile tool?
Well, absolutely. We just had our Tech Trends conference here in New York about a week and a half ago, and that's exactly what CIOs were saying. That they're saying, look, why should I spend $500 to $1,000 on a notebook or another PC when I could give a professional a tablet or an iPad for $300 or $400? And it's a lot less expensive, and they get to do everything they want to do.
All right, Benny, you know, we talk a lot about stocks, but we don't necessarily talk about the people who who run the companies that analyze the stocks. How did you get started in this business? I mean, how did you end up becoming the chief executive of Kaufman Brothers?
Sometimes I ask myself the same question. Well, I'm an immigrant. I was born in the Dominican Republic and was fortunate to win a Regent Scholarship and went to Cornell University, studied engineering, and worked for IBM and AT&T. And after that, I came into Wall Street in 1987, worked for a number of technology boutique banks, and then I spent the next 15 years in the hedge fund business. So I've been a hedge fund manager for 15, 16 years. So I tend to be very skeptical about things. And had an opportunity in 2008 to purchase a majority interest in Kaufman Brothers. I've known them for a long time. I was a private equity investor in them in 1995, the first investor there. And brought a majority and controlling interest and became CEO in June of 2009.
But always focused on technology. You always had that interest in the technology field.
I always loved technology. I mean, I don't know where that came from, but I remember seeing Star Wars, and I said, that's where we're going, and we're a long way from there.
We certainly are. So tell me about Hewlett-Packard, because I know that's one of the companies that you've been following for a long time. We have certainly been following it because of the new 5 board members, the new chief executive. What is the outlook for Hewlett-Packard?
Well, Hewlett-Packard we like. I mean, our analyst has a buy rating on it. It hasn't done well. It didn't do well as a stock last year. In fact, it was down from a stock point of view. But the company itself has been doing well and growing. The issue with them has been the lack of really growth, if you will.
Right, of innovation, of new products.
Innovation, exactly. They bought EDS, as you remember, so they've been integrating that on the services side. And they've been getting leverage there. But just the new innovation, the growth and so forth hasn't been apparent. So they brought in a new CEO, now revamping the board. So there's been a lot of moving pieces to the story.
Do you think that they have a strategy for mobile applications and mobile technology? Because they did buy Palm, but it's hard to find anybody that gets more excited about Palm than they do about, let's say, Apple or the iPad.
I know. It's hard to understand that move. And they bought it. They bought it for the WebOS operating system that Palm had. And we'll see. I mean, they're going to come out with their own version of it. But it's a crowded field. I mean, you have not only Apple, but the Android, which is really taking a lot of market share, and Nokia's Symbian. So the Palm is going to be in the back of the line, if you will.
All right, I'm glad you mentioned Android because I want to get your thoughts on Google. I mean, the results came out last week. They were better than many analysts had expected. Here's a $26 billion company growing at 25% a year.
Yeah. Well, the results came in, and they did better, as you said, and then we had the change in CEO. And that put a little bit of...
Are you concerned that Larry Page doesn't have the experience?
No. We actually like it. I think that it's good news for them. When Eric Smith came in, they needed adult supervision, and they were going to go public. Now they're grown up. They don't need any adult supervision. He wants to run his own company. And in fact, I think we'll get more innovation, faster decision making, and things will work out. The stock, however, has reacted negatively to that. But I think that over time, we'll see it do much better because it's growing very fast. And we're finally getting growth in the U.S. search business, which everybody has been saying that it's saturated and it's slow growth. And they've made a huge investment in Android, mobility, advertising and the Android is going to help them. And display, which is growing at 45 to 50%, is also helping. Not even talking about the international marketplace, which they should get a lot of growth.
Tell me about Terramark. I know that's another company that you've been following for a long time.
I know. Well, Terramark is a play on data centers and data center consolidation, cloud computing, managed services, and it's a company based in Florida. So we like them, and they are doing very, very well.
All right, I want to leave it there, but I want to thank you very much. Benny Lorenzo coming to us, Chief Executive of Kaufman Brothers. Thanks very much.
Thank you, Ken.